Hello, this is Bob Joyner, and in this video we're going to be talking about SPY options and day trading strategy for those options. And I'm calling this the Fibonacci lesson. I'm actually using Fibonacci in 3 different ways for day trading the SPY. So let me go ahead and show you what those are. Alright, so we're going to begin with the daily chart of the SPY. And the first thing I want to do is I want to look at making some fib lines based on recent highs and lows. So one of the ways that you can do that is you come up here to the green button and you can press, like, let's say stochastics, for example, to help me see some overbought and oversold areas within the chart. And if we do that, we can see stochastics are overbought up here in January, and we were oversold towards the end of January, on the 24th, when we came back down here. So what I'm going to do is I'm just going to take a Fibonacci, and I'm going to go ahead and draw a Fibonacci. I'm going to take from that high and pull down to that most recent low. Edit this and make those lines a bit larger. I'm going to also go ahead and add some colored lines to each of these fib lines so that we can see them better. We can see there's an orange line up here at the 61.8% fib line. I pulled from the high down to the low, and we are just simply retracing a part of that trend now. Came up and we retraced back up to the 61.8% fib line and hit our head there. So after I've got those daily lines in place, I'm going to leave those on the chart, narrow down to a 10-minute chart. Sometimes when you're looking at a chart, well, you're wondering, well, why did price turn there? Why did price make a movement there? Why did it consolidate for so long at this point? A lot of times it's going to be because there's an area of support and resistance. Specifically, in this case, we're looking at Fibonacci. It's important to know if you're day trading anything or swing trading anything or intraday trading. You want to understand price. Why is price finding resistance up in this area? Obviously, we hit our head on that line several times on the 9th, and then on the 10th we opened up very low, almost coming back down to the 50% fib line, but there was another line of different kind of support down in here where we bounced. We came right back up to the 61.8% fib line on a very big 6-point move back up in the market after that big gap down. So on February the 10th, here we go. We come up to the line again, go a little bit above it, and then we tumble back down. Now, do you think it's important for you to know that that line is there if you're day trading the SPY? Well, absolutely. And then you can see after we came back up to that level and retested it, we came back down to the 50% fib line down in here. This is on the 10th of February, and then tumbled down to the 38% fib line. And then on Friday we closed below that 38% fib line. Alright, so now that we've got those swing trading fib lines in place on the SPY, we're going to take a different approach. So for this, I don't use the stochastics at all. On Thursday, the 10th of February, you can see where we gapped down. So what I'm going to do here is I'm going to take a Fibonacci retracement, and I'm going to draw a line from that open down there to this most recent high up in here. Now, as you can see, that's not the high of the day, but it's the first high at that point before we have any kind of red bar retracement. And when we do that, what we can see is we have a whole different set of Fibonacci lines, and on that you have the 23% fib line that comes in on this one. So we can change those colors of the drawings if we want to have different ones. So as you can see, when we pull the line from there up to that intraday high at that point, then we end up with a 23% fib line right in this area. And you can see right in that area is where price found support. This is looking at a 10-minute chart, and then we went up to a new high today. So one of the things you have to do when you're using the intraday Fibonacci tool and you're looking at the day's range is, as that day's range moves, you have to adjust the fib line. Next up, we can see where price went up to a new high, so I'm moving that fib line now up to here. That open fib line stays the same, but now we have a new high slightly, so we move the lines. So we came down, tested the 38, and then you can see we came down and tested the 50 over here. These Fibonacci lines drawn from the day's range help us look at areas of possible support or resistance on the intraday level as well. And then as you can see, we came down, we tested the 50% fib line, if you can see right in here, and then we came back up, retested the 23% fib line, hit our head there, and then collapsed all the way down to the swing trade 50% fib line. And to let you know, I am on Instagram. If you want to follow me there, you look for Stock Talk Charts, as it says on the screen. Each afternoon I'm posting a recap of the last hour of the SPY options. Now you can go one step further, and this is the third and final part that I'll tell you about, and that's where you can actually use the overbought and oversold conditions within the intraday chart to do like intraday swings. So for example, back to the 10th again, this is still on the 10th that we're looking at. I've got both series of fib lines already in place, but now I can add a third. I take the Fibonacci tool. I've got Copic curve down here on the bottom. I can see the highs and the lows in here. So for example, I could take from that high point a Fibonacci tool, pull down to where that low point was, right, based on this Copic curve low. I'm going to make it blue so it stands out. And now we have three different types of fib lines for possible support and resistance. One of the things to remember is that these lines can overlap, and when you see multiple lines of support or resistance overlapping within a single area, then it's important to pay a special attention. I drew the line here from this high point up in here, and then we had this retracement down to VWAP, which is this orange line right in here. After we found support here at VWAP, we bounced back up, and where do we hit our head this time? This time we hit our head on the 50% fib line. If you're coming up to that line of possible resistance, and you think that you might get stopped out of the trade, well, it's good to have that line, to know where that line is. Let's say you thought it was going to go lower and you're getting ready to stop out in case it continued higher. Well, if you know that that fib line is there, that might make you hesitate about exiting that losing position. So what I've shown you in this video are three different ways to use Fibonacci for trading the SPY options. Okay, so just to reiterate, how do you draw the lines real quick? You identify the highs and the lows. You identify the most recent trend, whether that's been bearish or bullish. If the trend's been bearish, prices move down, then you begin the fib drawing at the most recent high, and you pull down to the most recent low because you want to see how much has price retraced back up on that bear trend. And if the trend has been bullish, price is moving up, then begin the fib drawing at the most recent low, pull up to the most recent high, and that way you can see how much price is retraced from that bull trend. So think of it this way: how much of the recent trend has been retraced is what you want to be asking. So in this video we talked about three different ways to draw the Fibonacci retracements, and next I'm going to talk to you about why that's important. But three different ways. We used the daily chart to draw swing trade levels, and we left those levels on the intraday chart so that we can see those big levels. We used the daily range to draw adjustable fib lines, adjusting those fib lines if we have new highs or new lows during the day's session. And then we can also use the 1 or the 5 minute charts to see intraday swings, such as those little swings that happen, and see possible areas of support and resistance. And the key question is, why is that important? Knowing key Fibonacci levels helps you understand key levels of support and resistance. These are lines that other traders are watching, so you need to be watching also. Knowing this helps you with trade management. It's when to scale out of a position for maximum profit. So the main way that I think of the Fibonacci lines, or any kind of level of support and resistance, especially as it relates to trading the SPY options, is that, for example, if you know that that big 61.8% fib line is up there on the chart, and you are having a bull run back up into that and filling that gap as we saw on Thursday, and we come back up to that level, knowing that that level is there helps you assess, is there any resistance between price where it is now and where it might go. If there is no resistance there, then it might encourage you to hold that trade for a little longer. It might help you to actually scale into a much larger position as that trend continues. That said, when you get to that level, there's no need to hang onto that option in the hopes that it's going to go up. If you have a big line of support or resistance on the Fibonacci lines, then that's a time for taking at least a partial exit, and that's what I teach in the afternoon SPY chat room, is how to scale out of those positions. Then you don't want to be hung up in that time decay that's going to occur and that price decay that's going to occur. So it's important to know those levels of support and resistance for help in managing your trade and seeing the potential of a much larger trade, but also taking profit when you come to those key levels. And before you go, I just want to let you know that I do have an afternoon chat room called the Afternoon SPY, where we focus on the SPY options, day trading purposes only, not swing trading. That lasts from 2:45 until 4 o'clock each afternoon Eastern. There's a link in the description box. See a 40-minute webinar that I've created about SPY options, and then you can also get on my notification list so you can have free access to that room once a week and see if it might be a good fit for you. The link is in the description box beneath this video. So thanks for watching. Here are a few other videos you might be interested in. Thanks.